Welcome to Explain the Charts. Today we're going over USDCHF, the US dollar versus the Swiss franc, and we'll be looking at news and chart data. First, let's look at the news to understand the context of the market. The US dollar has been weakening in recent days, influenced by the Federal Reserve's recent rate cut. This move was driven by concerns about potential impacts on the US economy, leading to a period of uncertainty and volatility. On the other hand, the Swiss franc has shown surprising strength. The Swiss National Bank has proactively lowered interest rates, a move that's a result of decreased inflation. This proactive approach has created a sense of stability in the Swiss franc market. The combination of a weakening US dollar and a stabilizing Swiss franc suggests a potential for continued downward pressure on USDCHF. Now let's look at the charts to see if this narrative is reflected in the price action. We'll start with the daily chart, which provides a long-term perspective on the pair. Looking at the daily chart, we can see that USDCHF has been in a downtrend since early September. This trend is highlighted by a series of lower highs and lower lows. While there was some rebound earlier in the month, the overall picture is still bearish. The price recently broke below a key support level around 0.9050, confirming the downtrend. This break below support suggests that bears are in control for the short term. With this bearish trend established on the daily chart, it's important to analyze the smaller timeframes for potential entry points and trade setups. Let's zoom into the 1-hour chart to examine short-term trends and potential reversals. The 1-hour chart shows a more volatile picture than the daily chart. There have been several instances of price spikes and pullbacks, creating a choppy trading environment. However, we can see that the price is still trading below the 0.9050 level, which now acts as a key resistance. This indicates that the bearish momentum from the daily chart is still influencing short-term price action. The price is currently testing a support level around 0.8550. If the price breaks below this level, it could trigger a further decline. On the other hand, a strong bounce from this support level could indicate a short-term reversal. To get a finer-grained view of price action, let's take a look at the 15-minute chart. The 15-minute chart provides a very detailed view of price action. We can see that the price has been fluctuating within a narrow range, creating a consolidation pattern. This consolidation suggests that buyers and sellers are currently in a state of equilibrium. The price is currently trading near the midpoint of this range, making it difficult to predict a clear direction. However, it's important to watch for any breakout from this range. A breakout above the upper boundary of the range would signal a potential bullish reversal. Conversely, a break below the lower boundary of the range would indicate a continuation of the downtrend. By examining the confluence of news and chart data, we can build a better understanding of the current market conditions. The news and chart data suggests that USDCHF is currently in a state of flux. The US dollar weakness, driven by the Federal Reserve's rate cut, creates potential for continued downward pressure on the pair. However, the Swiss franc stability, due to the SNB's proactive rate adjustment, could act as a counterbalance. On the daily chart, the downtrend is well established, with recent break below support at 0.9050. The 1-hour chart shows choppy trading but remains below the 0.9050 resistance. The 15-minute chart displays a consolidation pattern, indicating a state of equilibrium between buyers and sellers. Looking ahead, key price levels to watch include the 0.9050 resistance on the 1-hour chart and the boundaries of the consolidation range on the 15-minute chart. A breakout above 0.9050 on the 1-hour chart would signal a potential bullish reversal, while a break below the consolidation range on the 15-minute chart would indicate a continuation of the downtrend. Traders should closely monitor the news for any further developments that could impact the currency pair.